ETFs, exchange traded funds, just in case folks don't know about them, or know, everybody's heard of them, but do you really know what they are? So, mutual funds, we know what mutual funds are. You've got a manager behind a portfolio. People throw in and buy shares of this portfolio, and then that manager takes that big hunk of money and moves it around based on his experience, and usually a team of analysts that work with that manager to give him guidance on what to do next. An ETF is a little bit different. An ETF is a mechanical basket of funds. It could be stocks, it could be other stuff, and it's a certain percentage of each individual asset put into this basket of funds, and then they create shares of this fund, and so you can buy into it. So a lot of times ETFs are created to mirror, for instance, a sector. Like there's a industrial sector ETF, there's a transportation sector ETF. There are ETFs that mirror the S&P 500. There's uh, ETFs that mirror the Dow Jones Industrial Average. There's an ETF that mirrors the Nasdaq 100. So there's pretty much an ETF for any sort of grouping of things that you'd like to invest in. And there's some ETFs that even give 2 times the, so if the S&P moves up $1, it would move up 2 times that amount, and things like that. And it's this proliferation of ETFs that have actually caused this phenomena in the stock market called correlation, right? Because there's an ETF, maybe let's use an example of the ETF with the internet world, right? So if a whole bunch of investors think tech and the internet is going to get hot, they'll start buying this ETF, which is probably a basket of things like Meta and Google and any other name that's synonymous with the internet. And so what happens is whether Meta, the company, is doing well and Google is doing poor, or vice versa, when this ETF goes up, they all go up, because buying a share of that ETF is like buying one share of Google and one share of Meta. So you get this correlation. So you kind of move the stock and its movement, price action movement, farther away from how the actual company is doing. So for diversification, people love ETFs because now a stock like Meta could go in the toilet, but if the rest of the internet companies are doing well and you're invested in the internet ETF, you're not going to get kablooied, hammered by Meta going into the toilet. So that's why people like ETFs. But ETFs have that kind of, you don't get something for anything. And so because ETFs are diversifying, and they've become so popular, there's so much volume traded in ETFs, it sometimes outweighs the volume that's traded on the individual securities. Because you're getting that diversification, you're starting to actually make the market move in ways where the being able to analyze an individual company or security becomes problematic. It becomes a little bit more separated. So we have to take into consideration this correlation effect. What's nice about options trading against ETFs is because there's so many people interested in ETFs, there's also so many people interested in the options on ETFs. So a lot of times the options on ETFs are very liquid, and you can get in, get out. There's a lot of people trading them. It becomes a very safe security. When you want to sell, there's always a buyer. When you want to buy, there's always a seller. So that's a good thing about the options on ETFs. One of the bad things, though, is because there's nothing traceable, and this is one of the reasons why I'm not a fan of investing using ETFs, nor am I a fan of the options on ETFs. It's because there's nothing to track what the ETF is. There's no way to get an idea of the ETF's movement besides looking at hearsay, besides looking at what's happening in the media, right? The transportation stocks tend to go up when there's something in the media, or they tend to go down when there's something in the media. There's no like fundamentals I can look at to get an idea as to whether or not the asset that I'm about to sell options on is a solid asset. For my premium selling, I like to look at earnings. I like to look at dividends. I like to see, put together the picture of what that underlying asset does so I can get an idea of what's moving forward. And you can get data, business data on how a company is run for equity OS. With ETFs, it's, the ETF literally moves based on what's happening in the sentiment. It's much more of an emotional move. And sadly, that emotional move is starting to affect or affects the stock moves. But it's a lot harder to predict the patterns on an ETF because you can't base it back down into something solid.